Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. He's speaking to us from beautiful Alabama. Welcome back to the show, Tim.
Jim, thanks for having me.
Tim, what's the story with reverse repos for people who don't know what they are? What are they? Who's doing them? And what kind of an impact are they having?
Well, I don't fully understand the process. It's terribly complicated. I do understand it well enough to know that they started ramping up in March, and I think, it's probably multifaceted, but from my seat and what I'm watching, I think that I don't want to say, I'm trying to choose my words. I can't say that the main aspect of them, but certainly an aspect of them was to try to put a floor under short-term rates. Because right as we started to see the short-term T-bill rates, looking at the 3-month and the 6-month, right as we saw them start to press down on the low from 2020, is when we saw this thing escalate. And it has put a floor under those rates. So, while they talk about wanting low rates, that's true within within some parameters. And I think they were trying to prevent them from collapsing below zero, which is where they were about to go. And so I think that's one aspect of it. Another aspect is I understand there are some collateral issues, and they're trying to provide collateral. That gets terribly complicated, and I don't pretend to understand that. But I do think that it's, like I said, it has to do with rates. The other thing, looking at it, and these are overnight by and large. I saw some looking through the data where they would go for, a couple of days, but mostly it's overnight. But the thing we're seeing is, and in looking at a chart, I found the data and actually plotted this, but, it's escalating. So whatever the deal is, it's not getting better. Something's getting worse, or the pressures are growing, or however you want to phrase that. But we're seeing, we've got to the point now where, we were in the, it had escalated or ramped up to the $500 billion a day range, and then, next thing you know, we're at 6, and then 7, and then earlier in the week we were at 8. Last week at, 800 billion a day. And today we saw a whopping 991 billion in reverse repos, and it brought the monthly total to, now I realize these are, like I said, overnight, but looking at the escalation of it, how it's ramping up, if you look at it on a monthly basis, we were at 14,126 billion for the month of June. And there's, it's unprecedented. We've never seen anything like this. So, and when you look at it, you look at a chart, this dwarfs anything seen, even in 2008 or 2020 or any other time frame. It's unprecedented what we're seeing. So I don't claim to understand everything that's going on with that, but something is up, and I think one of the angles is to hold that short-term rate.
I was going to say, where's this money coming from? Where's it going? And does somebody have to pay it eventually?
Well, I don't fully understand that. My understanding is that it is treasuries. It's a matter of selling treasury bills. So beyond that, I don't fully understand those operations. It is an extremely complex, behind the scenes matter that I don't know, Jim. I don't know. I don't fully understand it.
With treasury bills paying so little, even for the 10-year note, who's buying them?
I understand that's the thing. You don't know. I don't have that data, but here's something else I'm seeing. I don't know the answer to that. But one thing I'm seeing, they call it counterparties. The counterparty, whoever the parties involved, that's growing too. And so there's a couple of aspects to this, but it's looking at that, does that mean that whatever the problem is, that the problem is growing because there's more people coming to the trough, so to speak? I don't have the data, but it had creeped up. It was in the 20s and 30s as far as the number of counterparties, and I saw earlier in the week a 74 or 79. So the number of people or participants partaking is also growing. But again, I don't understand that process completely.
When you say it's to shore up short-term rates, is it also to make the stock market look a lot healthier than it actually is?
I think that may be a byproduct as well, yes. I do. This market is trying to put in an intermediate and slightly longer term top, which is an opportunity for an even longer term turn. I mean, anytime, how do I say this? We're at a cyclical juncture, and we've been there for a couple of months where, it'll try to bite with a turn, and it just hasn't quite materialized. I see with some of the proxy indexes and some of the key stocks that I follow, I do see where it looks like that we've got a top, but with the mainstream averages, no. And so I say no. I mean, I can't say maybe we have a top. I misspoke. We could. I can't clarify that we've seen the turn. In some of the underlying proxy stuff, I can. I think we have seen that. And in looking at some of the other, asset classes, I think we've probably seen a turn. One thing we've talked about is I think that, pretty much all asset classes are going to peak in close proximity. Well, we've seen that. Like I said, we talked about the lumber. We've talked about Bitcoin. We talked about, I think, the housing market, probably. And so we're seeing a slow progression with that turn, but has anything solidified with equities? We can't say that yet, but I think it's trying to happen. And yes, I think an aspect of this, in addition to putting a floor under the market, was to try to perhaps hold this or stem the turn, if you will.
Well, so many people feel that the stock market is close to topping out. If it is, what happens and when does it happen?
Well, it happens when we see, and I know this doesn't sound like much of an answer, but actually it is an answer, when we see the structure solidify. It's like, it may not make sense to some people, but just like we saw with the turn in 2020, you have to have the proper structure for a footing for the turn. And that's what we've been seeing, trying to build, but then it will it'll slip. It won't quite materialize. And so when we see structure that materializes, then we have a footing for a turn. Then the question becomes, okay, can they pull another rabbit out of the hat? How well can they hold it? Does it get away? It's a progression of events. But when we do get a footing for a turn, as stretched as it is, as extreme, like I said, you look at it from any measure, from a valuation perspective, if you look at it from a rate of change perspective, if you look at it from, I don't remember if we talked about it, but I looked at it looking at just a percent change. I mean, you look at the last 14 months, and the reason I took the 14 months is because as of right now, the high in the industrials is in May. And that's 14 months from the low in 2020. And you look at any other advance move, 14-month advance moving into the top in 87 or 29, this dwarfs that. And so my point is practically any measure you want to look at, it's an extreme. And so when we get that footing and it solidifies, we'll see it. And then when the crack comes, I mean, it's almost like anybody's guess, but I mean, I think that when you do get the footing, it's going to be a very, how would I say, fragile situation. And then, I guess the next question then, like I said, is, how well can they contain it? Can they do it again? Can they come out with another, can Powell speak and reassure the market and, manage to pull the rabbit out of the hat and hold it? Or is this the point where it just goes? But the first step is structure. And that's what we're watching closely.
Did Bitcoin tell us what could happen to the markets in the near term future? Because when it fell from 60,000 down to below 30.
Yes, that's a perfect example. And if you look at that's what I've been preaching. And you know, that's the way most all bubbles unwind. The setups tend to be subtle, and then all of a sudden, boom. You know, we talked about it. And again, I don't remember if it was the lumber or if it was the Bitcoin specifically, because we talked about both. But you know, several shows back, I mentioned it because I knew that both were trying to top. I don't remember which one specifically I talked about. And by the time we did the next show, it was over. I mean, it had broken. And I ran some numbers on Bitcoin, and I can't remember now the exact numbers, but Bitcoin and lumber, last I calculated it, they were down over 40%. One was down 43% from the high to the low. The other one was down like 47% or something. And it's just, you know, bada bing, bada boom. My point is, if you look back at all the bubbles in history, that's how they unwind. And so that's the danger here, but nobody understands it's a bubble because it's so damn extreme and it's been going on for so long. And like I said, every time it tries to crack, you know, the rabbit's pulled out of the hat, kick the can down the road, as they say, whatever, and it goes on and on and on and on. So again, first step, structure, and then, understanding the risk and the danger with that structure, and then it's a matter of what happens.
The $1 trillion infrastructure plan that looks like it has a good chance of being passed, are they going to have the materials to do it and the labor force to do it? Because here in British Columbia, there is a severe shortage of trained, skilled tradesmen who would install the steel, the concrete, the glass.
Well, I would agree with that, but I see it in a completely different light.
Okay.
Completely different light. Beyond that, the way I see this is just like the COVID stimulus bill. You know, and I don't know if this will make sense, but this is, in my eyes, this is not, the COVID bill wasn't about sending someone $600 or $1,200 or whatever it was. It was about expanding the federal debt to keep this house of cards going. It was just like the South Sea bubble. It's an avenue to continue expanding the debt. And that's what I see here with this infrastructure bill. I don't see it as building a new, that's a sideshow. That's a side point. The real point is expanding the debt and keeping it going. And if you think about the timing of all of these so-called, the COVID bills, look at the timing of that now from that perspective. Look at the timing. Here we are with this repo thing going on. Here we are trying to get structure again. Here we are. And here comes another bill to expand that debt. It's about keeping this thing going.
We'll have more with Tim Cyclesman Wood right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what's going on with gold?
The 9-year top, we've talked about that. We had intermediate and slightly longer degree tops. We had the structure. Talk about structure. We had structure in place. Wrote about it in the letter, the updates, and down. It's gold is getting close to a short-term low for a bounce, but with the longer-term structure broken, I think any bounce is counter trend, lower prices, and so that's an asset class that has peaked. looking at transitioning over from gold, kind of related commodities. So far, if you look at crude oil, it's holding up, but it's been like a yo-yo. One day you'll get a little half-hearted sell signal, and you get a half-hearted buy signal, and a half-hearted sell, and it's like looking at I don't know how you would say it, a EKG machine going nuts. It's trying to peak, but it can't quite bite. So I think we're working on a top there quietly, and but it continues to hang on. And then I think with interest rates that we've seen the short-term bounce because of these repo stuff that's going on, but I think the pressure is ultimately going to be back on the short-term rates as well as the long-term rates.
Thinking of crude, so many people rushed out to buy an RV, some way to get out and holiday with their family, not being sure what the holiday situation would be. Well, wait until they fuel the thing up for the first time. I was shocked back in the 80s when we went out in my parents' motorhome and it was $200 a tank. Well, I think nowadays it'd be more like $600 or $800 to fuel the thing up. How far are you going to travel from home after that first fill up? And what's that going to do to gasoline supplies?
Exactly. And to me, it's not worth, I'd rather stay in a hotel. Drive in my car and stay in a hotel. I mean, I get it. Some, people want an RV, but to your point, it's like I had a boat, it had 100 and I forget now, but I want to say it's like a 160 gallon tank. Well, go fill that up. And in an average boat with a big outboard, you get like 3 miles to the gallon. So, no, I get it. It gets to the point where, I guess my point is that these higher prices that people are saying that are inflationary, and they are while they're at this point, but looking at the economy and the way things really are, like I said, I think that is a heavy tax, a heavy burden that is going to contribute ultimately to the turn. And I think that's what we saw in lumber, and I think that's what we saw in, consequently in housing, which again, I think have turned.
Tim, thank you so much for chatting with us. Have a great July 4th.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.